What I'm going to share with you today is how business owners can legally save $24,000 in taxes with 6 proven tax strategies used by our clients. My name is Karen Yu. I'm the founder of Astute Advisors. Since 2018, I have personally talked to more than 1,800 business owners and have served over 190 clients, helping them implement the strategies I'm about to share with you. Between 2018 to 2025, we have saved our clients more than $10 million in taxes using the strategies and a few more. What I'm going to go over today are the 6 common strategies we use for most of our clients. My goal is to show you what a little tax planning can do for your finances. We'll use the persona of a business owner who's married and has a 10-year-old child and makes about $200K in taxable income. The effective tax rate, federal 14.4%, California 5.4%, total 19.8%. For the ease of calculation, let's use 20%. So let's get started. Strategy number 1, home office. This is not a red flag, as long as you use it exclusively and regularly. So let's take an example of home office of 120 square feet. Total home is 1,200 square feet. The monthly expenses is $5,000. So you use 120 divided by 1,200, that's 10%, times 5,000, use 5,000 times 12 times 10%, that's 6,000. And 20% tax savings is 20% tax bracket, that's 1,200 in tax savings. There's an alternative method called number of rooms. Let's say you use 1 out of the 6 rooms in your house, that's 16%, as long as they're about the same size. So 5,000 times 12 times 16%, that's 9,600 in expense deductions. And the tax saving at 20% for that is 1,920. Just by using a different method, you increase your tax saving by $720 here. Strategy number 2, Augusta loophole. If you rent your home to your business for 14 days or less in a year, the income derived from such use is not included in gross income. So let's take a monthly board meeting, for example, and you have your board of directors or advisors, they can even be your family. And we pull quotes from Terranea, $1,000 a day, 12 times 1,000 is 12,000 times 20%, that's $2,400 in tax savings. Think home office as your office, and Augusta loophole, use that as like a meeting room in this case. Strategy number 3, hiring kids with Roth IRA. So let's say standard deduction is $14,600, and as long as your kids is under 18 years old, you pay them out of the sole proprietorship or partnership that both partners are parents. You don't have to pay the FICA taxes, Social Security and Medicare. That's Medicare taxes, that's 15.3%. So $10,000 times 20%, that's $2,000 in tax savings. And then now they have earned income, you can even open a Roth IRA, put $7,000 in there to grow tax-free forever. Strategy number 4, S corporation election with a reasonable compensation. This strategy is to help you to eliminate some of the unnecessary Social Security and Medicare taxes. Again, that's 15.3%. Let's just say your taxable income at $200K with some cap and everything is the FICA taxes is about 27,000. And you do the reasonable compensation study and find out people in your role gets paid $90,000 instead. So that tax saving is $13,770. That's huge. Strategy number 5 is QBID optimization. This might expire at the end of 2025 if it's not extended. So your net income is 110K times 20%. This is 200K divided minus the 90K reasonable comp. So your net income, net profit from the business is 110. Okay, times 20%, and with the federal tax bracket of 15%, you get $3,300 of the federal tax savings. So the common mistakes we see in this scenario is leave no profit in the business. That means you don't get this qualified business income deduction. And what people do is take everything out of the payroll or spend everything, and then they call it reinvest in the business. Okay, strategy number 6, pass-through entity tax credit. This could expire in 2025 if it's not extended. So what is this? Basically, you just pay your state income taxes from your business rather than your personal account. You can overcome the $10,000 state and the local tax deduction cap. So 110 was 9.3. This is California, by the way. 110K net profit 9.3%, and that's 10,230. This can give you a federal level deduction, which is 15% tax bracket. That's $1,535. So make sure California, like for California people out there, California is very, very strict about this. And June 15th is actually you have to make that estimate tax payments. And don't miss this. If you even miss a day, they consider you are not qualified. This is a huge deduction and the easiest one you can do. Okay, so to recap, we covered 6 strategies today. Home office, about $2,000 savings. Augusta, 2.4. Hiring kids is 2K. And then the huge potential is you can open a Roth IRA for them to grow tax-free forever. And S corporation election was a reasonable compensation report, $13,000 savings around qualified business optimization, 3.3K, 3.3K. Yeah. PTE 1.5. Okay, path to entity tax. So that's about $24,000 out of your 200K income. So that is about 12% more after tax money to you. Okay, so the greater the income, the higher the tax savings, and of course, the more strategy you can utilize. I hope you find this valuable. Leave anything, if you have any questions, leave that in the comment section, and you have a great day.